Yo, how's everybody doing? Once again, this is Mr. Anderson, True Crypto 28. So we did a video, and that video was in reference to finding edge utilizing this tool, True Vibration, which is the tool up here on the top. And I just wanted to make that video first and foremost. I really did fly through it intentionally. I'm sure there were some aspects that might have blown by a lot of people. And the reality is you really shouldn't be watching this one unless you've already seen that one. Because I made that one to give you the broader context and see the edge. I don't believe that anyone actually watched that in full and doesn't realize that, yes, there's definitely significant edge. Whether you can do it yourself, whether you can abstract it yourself, whether you understand it yourself or not, I think I displayed that when the markets trend, you're 100% going to see significant edge. And also, when it's ranging, that there's a capability, that it provides you the ability to find more edge as well. Now, I'm the first to admit that, hey, in trading, things can get a little tricky, right? Especially when we go to multiple time frames. It's very easy for me to show you something here and it looks super clean. Then you try it yourself and you're going to stumble upon a lot of situations where it's really not. And that's kind of what I'm going to focus on subsequent videos relating to this topic. So I figure I'll give the topic and quickly show that, hey, this is the purpose. But then from there, get on one subject, and then the next video will be on one subject as well. So this particular one is going to be on the fact that, one, we're going to focus on one time frame here. At the moment, we have the 4-hour time frame up. So we're not going to do a 4-hour to a daily or anything like that. Of course, you can feel free to do that. I'm just specifically going to talk about a couple things. Well, first of all, anyone that knows me, I'm always the market structure first, always guide, right? Well, first of all, what is market structure? Market structure, just literally just pulled up the first thing, is going to, in the simplest form, give you, what are we doing? Are we making higher highs and higher lows? Or are we making lower highs and lower lows? That's going to be the question as it relates to market structure. And really, it's an underlying framework that defines the organization and dynamics of a market. It encompasses various elements, the shape of price action, market behavior, things of that nature. And it's really going to be dependent upon the time frame that you're looking at. Of course, the overall market structure is going to be more dependent on the daily scale and then even the weekly scale as well, as opposed to these lower time frames like we're looking at right now. But we're still going to have a discussion on this particular video on the 4-hour time frame, and specifically how to utilize this tool even further with the mindset of market structure first. Now, the reason I'm doing this is I want to lay out some things again, because what I always tell people, and I've argued with people, I don't really see what the argument is, but I've argued with people for a long time, in that the reality is, in my opinion, what matters most above anything else in trading, right, is, are you right about the direction? Because if you can get proficient in the direction, and what I mean by that is pretty simple. Are we headed down or are we headed up, right? And I'll give you a couple examples. I'll fly off this really quickly, which is, let's just take this period of time right here, from here to here, just randomly picking out two areas. Well, you could see how the market was trending. If you had an upward bias during this time frame, needless to say, you probably struggled. Now, if you have some excellent technique, I could tell you there's a few ways that you could have played this where you actually wouldn't have gotten hurt that much taking longs. But it would have been difficult, and it would have been an achievement to do so, right? However, if you had a downward bias and were only looking for shorts during this time period, it's pretty safe to say that you probably made money. So that is why I say that getting the direction correct is step one, right? So we're going to talk about how to do that, because that's a lot easier said than done. And one of the ways is establishing what is the market structure, right? Again, I told you we're not going to talk about multiple timeframes here, but reality is you can peek at a lower time frame. It's going to help you a little bit. That's kind of how you can kind of go back and forth on market structure. But again, really quick back to this one because I am not going to teach this. I actually made a video. It's called Market Structure First Always. I will attempt to put it in the description of this particular video, but I was thinking about getting this video out today. I'm not sure. I might release it after the weekend, but if I do it after the weekend, I'll certainly make sure it's in there if I can. So whether it's there or not, but check the description if you like. It's not going to be a pop-up or anything like that. And I'll try to link it there for people that really have no idea about market structure. They're struggling with it. If not, you can also Google it, go on YouTube, etc. Literally, this is trading 101 when you're talking about technical trading. You should be proficient in market structure. So all we're focusing on is, are we making higher highs and higher lows? Or have we recently broken, you see this right here, have we recently broken that structure? That's it. And for the sake of this, what we're going to look at are a few different scenarios, right? I'm going to utilize back to the first video, which you already should have looked at and watched before watching this one. And we're going to focus only again on FSR, which is the skinny pink line here. And we're only going to look at resets, which I've explained in the previous video that we're going to consider for this video. 10 and 90 as official resets of an oscillator. I'm not going to re-explain that. That was all explained in the first video. Now, a lot of my guys know that we've talked about 20 and 80. You can use that too. 10 and 90, a little bit safer. 0 and 100 if you want. I say focus on 10 and 90 for the sake of this video. Once you're good at it, once you're proficient, once you know what you're doing, do what you want, right? Because now you have the eyes to achieve it. See, a lot of people, they look at everything as binary, and nothing in trading is really binary. So it just creates a situation to where you're looking for something in the wrong language, right? So if you're looking just straight black and white, no, most things are gray when it comes to trading. The sooner you realize that, the sooner you'll be on your way, right? Okay. So why bring all that up? Because what we're going to do is we're going to establish a couple rules, and then I'll just run through price action with you. The rules are going to be this. When we're making lower lows and lower highs, we're going to have a primary lean towards continuation, which means we're going to be focused on the resets of FSR once they hit 90, and that is the time that we would look for shorts. I need to establish that because when I run through it, I don't want you to come back and think like, oh, this guy's BSing me. That's not the rules. No, I'm going to show you the rules. So that's going to be number one. That's the primary read. When we get a reset in the direction of our market structure, what does that mean? So we could see here that market structure was headed up, right? We set a high. We came back and took out the previous low of the previous range. That's how this works. But again, I have a whole video on that. And then at that time, this is a break of the structure, but it's not considered a BOS. It's considered a change of character. We're not going to get into any of that right now. The point is, once we break that last low, once we break that structure at all, we're going to then switch our mindset to say, hey, our lean goes the other way. Does that mean we can't trade the other way? Not at all. In fact, I'm going to explain to you when we would, right now. And again, this is also one technique. A lot of people, they watch a video like this and they think, like, oh, this guy's crazy. He said you can only do that. No. I'm saying for this technique of this 4-hour structure with FSR, by the way, I'm pointing as if you could see me, which is hilarious. But regardless, with this particular one, that's what we're going to look at. Does it mean you can't implement other things? Always feel free to. I'm just trying to establish that. So very quickly, as an example here, once we're now downtrending, once we break that level, we're going to look for resets to think about, hey, these are times when we'll look at shorting on this time frame and lower time frames. That's how that would go. And I'll go back and we'll do some examples. Now, that's one, right? So if you wanted to take a note, the note would be heavy leans towards continuation, meaning we're going to look for resets that are in the direction of the market structure at a given place in time. So whatever the market structure is, if we're going up, we're going to think continuation to the upside, and we would be looking for the resets at 10. If we now break some structure, we're going to be looking for the resets primarily at 90, right? Which I'll literally give you a lot of examples in a minute. Don't worry. And plus, this video is going to be pretty short because we're going to stay focused on this topic. Now, that's one. If you're going to take another note, this is two. Two is, now I'm not going to say the word heavy lean. What I'm going to say is, I'm willing, you understand that? I'm willing to consider counter resets. What's a counter reset? A counter reset means, well, we're going down and we set a reset, I'm willing to consider counter resets if, and by the way, when I say I'm willing to consider counter reset, especially on the lower time frame, on this time frame, I'm willing to consider it. But if I'm willing to drop it by a time frame, meaning go from a 4-hour to a 2-hour, or by 2 time frames, meaning double it, go to a 1 hour, right? Then even more so, right? Because I can focus in, and again, it's probably another video, but I'm just making a point that I'm willing to consider counter resets in the opposite direction. That's what the counter means, right? So even though we're going down, I am willing to take some longs if market structure is showing me a higher low. That's it. Pretty simple. So what does that mean? Well, you see this example right here again. We know we're looking for shorts primarily, but we came off of a reset on the top side and then came down for a reset right there. So that would be an example. I'm just going to find my arrow that I never use. You guys got to know that whenever I make these videos, it's like starting fresh for me because I never use these things unless I'm making something for you guys. Okay, so this is right here. Right there. Okay. So that would mean that this is the example that in that situation, even though we're clearly downtrending here, right, as far as the market structure, again, if you don't see that, then you should say, well, I got to spend some time focusing on understanding market structure. So for the sake of this video, I'm just going to assume everyone understands. That would be that example right there, right, because it is a higher low than that low right there. And really, I'm taking a higher low than the wick itself, but obviously, you can do it on close. We won't talk about those little distinguishments right now. So that's one example. Another example would be right there. Why is that? Well, because we went from a reset down here to a reset up top where we would have considered shorts. We kind of mold about, and then a reset again, which is a higher low. Now, the structure is this way. That's why it's a counter. I'm countering the market structure at this time, and guess what? It looks like it paid off well. And when you hear the phrase, especially on a lower time frame, well, now you know what I mean, because this on a lower time frame is suddenly going to look like one hell of a move, right? You might have probably caught the bulk of that. Then you're going to run back into resistance, run back into a supply zone, take some profits, etc., right? But it's a way to catch some of those counters by utilizing basic market structure and a very good tool. That's it. FSR, right? Faster, smoother. That's why I named it that way. Faster, smoother. It's faster than most momentum oscillators. It's smoother than most momentum oscillators. That's why I like it, okay? So that's that. Ultimately, that is not a heavy lean. That is a willingness. So I need some extra reasons for it, meaning there's going to have to be some other confluence there, etc., that might allow me to do that and go for it, but I'm willing to. Third, I'm also, now this is less than second, right? So first, the primary is heavy lean when there's continuation and I'm getting a reset in that direction. That was these guys. Second was a willingness to counter. Now third says I'm also willing to counter the direction of the market structure if I get a swing failure, right? So I get a swing failure, it holds. Now, look, some of these swing failures, guys, you're gonna get the bouncing ball effect where they're just bouncing pathetically and then they drip through. That's fine. So it doesn't mean it's magic. But if I get a swing failure like so, that holds, look at that. It came back, it tested the liquidity held. Oh, look at that. It happened to be a reset. Awesome. Maybe I go ahead and try that one out. And in this case, it could have worked out, especially on lower time frames. That's the same caveat. So that's how you can successfully navigate without a significant amount of risk. Now, use your risk management above all else. That's going to be key, right? So you have to utilize that risk management. But this is what can allow you within the range to say, oh, okay, well, look at me. I have this ability now to find some ways to trade in both directions. Now, I don't think people should be going long, short, long, short, long, short. Remember, one is, no, we want to have the heavy lean on those resets, but we also know markets tend to range, right? So with that in mind, this allows us to get the best of both worlds. And the reality is if you're only trading off of market structure, meaning without doing what I've said here, if you're only utilizing market structure and waiting for breaks of structure, you're typically going to be late, right? And that's okay if you have that system and it works for you. But I'm just making a point that, yeah, you're typically going to miss that first move because it has to go ahead and break the structure. And now you're waiting for the pullback into a wholesale zone of some sort. And, you know, there could be a long stretches of time where you don't trade. So that's something that goes in mind. And now I'm going to add something to this, a little star. If you want to make, if you're still making a note, make a little star, which is this. For all three of those examples, and again, you should be taking notes on that, but for all three of those examples, I will add some strength to it, if, meaning strength to what I've already noted, like heavy lean towards continuation. Well, I'm even more interested in that if there is a divergence within FSR, especially, and my guys know this, FSR hidden divergence, right? What does that mean? What I'll find an example, I'm not going to look for one right now. If I was looking for shorts and I happen to have a hidden bear divergence at a reset as well, that's going to only make it stronger for me to go ahead and take that continuation short trade to the downside. At the same time, my willingness to consider a counter reset, number 2 that I gave you, meaning go ahead and fade the direction of the market structure for a little bit, which I'm really only doing into the new range unless we explode through. But my point is, I have more of a willingness if I happen to get some divergence within FSR resets on those as well. So that's kind of the idea and the mindset of how we're looking at it. And we'll go through it. I don't know if I'm going to focus too much on the divergence, but I do want you to know that for those that are able to spot that pretty easily. And that's it really for this video. Now I'm going to go ahead and show you a bunch of examples because that's my way, right? I don't like to just tell people something and then go from there. But I do want to go ahead and give you some of this because this was in a time where we're chop, chop, chop. And I want to see how you might have been able to do. Well, we know we broke some structure. We get a rejection here. We break down on this guy. We see this reset. So this is the strongest ones that we look for, right? Let's just say we move this here. Now, there's going to be times, by the way, where you might look at this as one big impulse wave down. So whether you mark the top of your market structure here or here is going to vary depending on the person itself. So there are going to be those distinguishments, meaning where everyone's market structure is not going to look the same. You might see a little different than me, and that's okay. It's not the end of the world. That's why the rest of the system that I'm talking about is going to help people even more because it kind of allows you to blur those lines a little bit more in your favor, as opposed to having to worry specifically, hey, is this an impulse? Is this the right top? Is someone else looking at something different? That's always going to happen anyway. I mean, the reality is if you're the best in the world at marking out your market structure, guess what? They get trades wrong all the time. This is about consistency, finding a consistent approach within your own self and the way you go about things. And that's what we want to look at. Now, all I'm going to do now in the next couple minutes, I'm only spending a couple minutes on it, but I will spend some time. Let me first get a water here. All right. A couple minutes of examples of what we just spoke about, right? And I'll tell you if it's 1, 2, or 3 as I go through it. So in this case, as we broke down here, by the way, the break was here, right? So we were headed up like this. You're getting a little bit of structure. It's choppy as hell, right? This is chop, chop, chop. But we start to see like, all right, lower high, pop up here, make a higher high there. We're looking at this range. If you watch that video, you understand that. The moment that breaks, even just off this simple example like this, you broke your higher low. If you want to look at something like this, again, this can get more confusing, and it is because it's going to be dependent on time frames and things of that nature. But the idea here is pretty simple, which is once I break that higher low, I'm a little worried that, hey, we might be reversing. And anytime I see this now, I'm going to consider shorts. So let me just kind of zoom in on this now for a little bit as we get into the nitty gritty. Now that we've explained that, don't want to buy anything there. Almost did. Okay, no, it wouldn't matter because we're way on lower prices. Okay, so here we go. Right there is where we would get that first signal, which is here. So it would have been within this time frame that we would have been thinking about shorts. Obviously, we could lower our time frame at this point, by the way. Once you get here and you get to the reset, okay, so okay, well, hey, whether I'm looking for this local high, which happens right there, or I can zoom in now and say, well, let me go to a 1 hour. Maybe I'm brave and I go down to a 15-minute. Feel free to do it. But you would have started looking for shorts, and guess what? They would have paid off, right? In this example, at least. There's going to be plenty of times that it doesn't, by the way. Here's the next reset that occurs right there, like literally right there at that local top right there. You would have started to look for shorts. You came down. It looks okay. It comes back right into the supply zone. Perfect. And then fades out. Great. Another one that would have worked out well. On the flip side of that, we do see these were example ones, as I mentioned, but I'm going to give you an example that's going to fall under example 2, right? So this is the example 2 right there. Why? Because although we're in a downtrend, this is a counter look because it is technically a higher low. So you say, well, maybe we're putting in a little higher low. Maybe we're going to go back up to range highs or something along those lines. That would be nice. In this case, it doesn't happen. I don't even know if you get in or not, but let's say you did. You might even got in late. It comes back. You get chopped up. Who knows? The point is it did have some upward jostle to it. Again, I would say you want to zoom into the lower time frames when you do this, but guess what? It worked out, right? A little bit. Whether you got the trade right or wrong, I don't want to make that distinguishment, but we do see that we got some upwards PA, which was the idea of why you might consider a counter, and it did get there. So I'm not going to focus in and say, hey, would you have been able to nail it or not? That's not the point of this video, right? I'm just trying to make a point of edge, which we're going to focus on here. Now, guess what? Another example one. We already spoke about example 3 here, right? This is the swing failure. So you get the swing failure on an example 3 that happens to occur on a reset right there. A little bit of divergence, right? Because you're looking at the close. So the close is here, close is there. So we also have divergence. So that strengthens it. Like I said, remember, if you get some divergence there as well, that would strengthen. Now, we prefer hidden, but this is regular divergence, and that's okay. But we would have been willing to look for some counter longs on some lower time frames. And guess what? Up. Look, I'm only sticking to the rules I gave you, right? Nothing else. Okay, now back at this point. Hey, this is a number 1. This is the primary where we say, hey, we're looking to go with the continuation to the downside. Although we chop around and have a negative bias, it does head towards that direction. But by the time it gets to this reset, it hasn't dropped that much. Whether you got out successfully or not, it's not my point here for this particular video. I'm not trying to do that. But you could see, all in all, you certainly didn't get in any trouble with that. It did fade towards the downside, but didn't go too far. You could have seen that it tried to hold into support, which it did. And it also gave you a reset. So you're back into example 2, which is willingness to consider a counter reset right there at a higher low. See the reset? So we go reset to reset to reset. And this is yet again a higher low. And we see some upwards continuation. Now, we're still nowhere near any thought of breaking structure here to move back to the upside, but we've caught already a few longs within this process. Guess what? Right back in it. We're sticking with our bear bias above all else, but we could see that suddenly our directional bias of being short is giving us choppiness more than anything else. That's all I love when that happens, right? This is something to where like you can hang out, you probably made a little money, but after 3 to 8 candles, I mean, are you still on the same thought process? I'm not. My guys that have been around know that I'm not thinking that. 8 candles later, I'm not thinking, oh, same play. No, I need some more information now because there's been more data that's been given, right? So still, whether it's break even or a small gain, we still had the bias correctly. Then it happens again, and we're in one of these situations where, guess what? Not only do we have yet another reset there, right, coming back up, but there's also a little divergence. So that strengthens it for us. And guess what? It reacts even a little bit better. You get one little 2 leg down. That works out fine. Look what we get again. Same scenario right there. Perfect. Another willingness to go short. These aren't big moves. It's just chopping around in a tight range, but we're at least fading lower, right? So we're not getting hurt. If anything, it's break even or a win. We like that. Pop back up again. Same thing's going to occur. Now, I should point this one out because that is a reset. My apologies. So we're going to compare it to the previous reset on the downside. So the previous 10 or below, which is here. So from here to here, is this a higher low? Yes. This would be number 2, right? So number 2, again, is consider counter resets for long. So in this situation, and there is a local high, a local low right there, that would have been a long on this time frame and a long on many lower time frames, and you would have caught that move higher. Just everything we're talking about is just a simplified view to give us what? Directional bias. That's it, nothing more. Now, back up to this top side, and we're back to lesson 1. Now, guys, watch this video twice, 5 times, 10 times, 15 times if you have to until you get it. Take the notes on what I said for 1, 2, and 3 with the options of directional bias. And trust me, I believe strongly that I'm right when I say, hey, listen, right? Nothing matters more than getting the directional bias correct. Nothing matters more than that. So make sure that that's the case and you stick with that. Nothing matters more than getting directional bias correct. So since you see we're doing a good job of that, here we are. We're still in the bearish structure. I don't want anyone to forget. We got to get way up here before we consider it. By the way, it's actually way up here at a minimum. You might consider up there as well, which I would understand. But until then, we're not directly flipping. We're only doing counters. So still, same thing once again here. And guess what? We end up in a situation where once again, we're saying, oh no, we're looking for shorts above all else. And that short pays off, guys, once again, right? And then you get a reset right there yet again. Now, we had this reset. Was it lower or higher than this one? It was lower, so it didn't qualify as a fade. And look, nothing came about it. Then this one again, another bear reset, right? Meaning we want to look for bearishness. It fades lower. It's nothing to write home about. You didn't do great on it. You didn't kill it, but you made money. You didn't lose money, right? That's what happened there. Same thing happens right there. Now you can see the tide's starting to change a little bit, right? But still, same thing. You're fading. You probably got caught with this one right here while you're fading. You got stopped out for a very small loss, but you can see the idea of doing this and why it's beneficial. What I didn't mention was right here. This is, again, a number 2 because it is higher than this level right there. I'm willing to consider some longs on the lower time frame. It was a little bit of upward motion, nothing to brag about, but it is what it is. And the same thing happens right there. So this one's key, right? Because you end up in a situation where you see there's actually a nice jolt. Because compared to here, I am higher. This is a higher low once again, and I'm willing to think about some longs, which does in fact pay off. And you can see the structure here is looking pretty good. I am making higher lows. I'm not making higher highs, but they are higher lows ultimately, which is why you'd be considering. But same thing happens here. You end up thinking, all right, we're going to fade, and nothing comes about it, right? So that's fine. This one ends up being a loss, and we're good with it. And you can see you kind of take off from that position. But what I showed you here is I displayed the ability to have a very high hit rate utilizing this simplified formula, right? When if we only use price action, we might have been missing out on just about all of it, getting chopped up in some of those times where the shorts weren't working, and certainly being late to the party once it finally reversed, right? So that's kind of the idea. Now, once we get back up here, hey, we can consider longs again, right? That's the break of this particular level. Let me get this guy out the way. Let's just double him up right there. So we broke this level right there. Oh, great. We broke that structure. That's nice. I'm back now to thinking longs, right? Now this becomes a number 1 right there. Why? Because I got a reset in a situation where I'm looking for longs, and it is a hell of a long. That gives me one hell of a long. I haven't even reviewed this, by the way. This is not a section I went over. I literally just said, let me go into some chop. That's all I did. Now, this reset, we're not thinking anything because it is not a lower high. Remember, it has to be a lower high to consider fading. So we're not even thinking about fading. Is this a lower high versus there? No, it's not. So we're not even thinking about fading. Is this a lower high versus here? No, you stretched out. We're not thinking, oh, you know what? I'm sorry. You do have, again, this is one of these tidbits where on close, it is lower. So forgive me, I'm seeing it wick off. This actually gives you a combination of swing failure, some divergence right there, etc. And technically it is a lower high. My apologies. So you would have considered, you could see the close right there versus right there. You could have considered fading this, and guess what? It worked out well. But still, you would have been thinking about longs here. Little movement up, probably get stopped at a small gain, if not break even. And now we're back into the situation where we're saying, oh, look, lower high again, we'll consider fading. Even though we're in long territory right now, right? We're looking for longs above all else. You wouldn't have done it until you break, you wouldn't have switched that until you break this level down here, which is actually now going to move to right about there. And regardless, you come back. I don't want to give too many examples of this. You know, the reality is I do want these videos to be shorter. But again, you end up looking for longs in this region. Maybe you got stopped with one of these swing failures, but you do also know that this strengthens the cause. We've talked about that in the past. So ultimately, if you survive this, again, this was a little too long in the teeth for me. I don't like that. But you could see ways of why you would at least been looking for longs, and there was a potential to catch that once again because you're on that side. So I just kind of point that out. I don't want to go into too much more because I gave you a bunch of examples. Feel free to do it yourself if you already have this. If you want to request it from me, feel free, meaning the True Vibration tool, you can. Don't pay anyone for it. Just know that anyone that gets access has a no-cost option, and there is not a cost option. I mean, you cannot pay for it. So if someone's asking you to pay for it, they are scamming you, so be very careful with that. But that's it. Review it over and over and over again, and it's going to help you, again, to try to get on the right side above all else, right? That's what we're looking at. How can we participate? How can we be a little more aggressive in what we're looking at? You see these resets and say, okay, well, look at price typically fades after that, right? If you get one with some divergence, you start to see some ugliness come into play. These are things that can be very helpful. And I didn't even do it in the midst of a strong trend. I didn't even want to bring that up because that, when you're really trending, when you're really going, it's stealing. Now we're stealing. That's just the reality. So we're in this deep, dark drop like this. No, we're literally we're taking money in this situation, right? Look at these resets, down and 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 down again and down. And then finally you say, well, wait a second, we're starting to come back up. Well, guess what? You would have participated in this because this is a higher low versus that level. You said, yeah, I could counter it. The counter would have worked, right? You could see how that comes about. That's the idea of utilizing this kind of system to help you establish directional bias. Are you going to still be wrong? All the time. But that's the key. I'm out. This is the second video on this particular subject. We'll have more. Hopefully everyone's well. Again, study it over and over again if you're really trying to learn it. It will come to you, but it's important that you see it. So you got to see it. I can repeat it ad nauseum, but it's not going to make a difference if you don't see it for yourself. So work on that. Don't get too frustrated. I've been there. I know how that feels where you're missing some element of it. That's why I'm trying to simplify these and keep them on one subject matter at a time. And I'll continue to do so. Some of the videos will be super helpful for some, not as helpful for others. Just make sure you understand the concept completely before dismissing the video and not watching it again. Because I've had people that have gone back years and they go, oh my God, I watched that video before and I just found something in it this time 3 years later that I didn't realize before, because essentially you can watch it with a dismissive vibe, right? I think I established significant edge here in showing this. So therefore, in my opinion, it should be your mission to say, well, how can I also utilize that to my advantage? I'm out for now. Hopefully everyone's good. We'll talk to you soon.